No stranger to Kitco News, Philip Newman, Director of Metals Focus, joins me now at the LBMA in Rome. Philip, good to be reunited with you.
Hi, good to see you again, Daniela.
How's the LBMA so far for you, Philip?
Well, it's very good. We have a stand for the first time at Metals Focus. It's in a very good position. A lot of people coming by. We have ice cream, so it's a good buzz for us.
Right. It's about going to be 1 year that you're with Metals Focus now?
We started earlier this year. We started in sort of March, April time, but already quite a lot of traction we have.
Excellent. So let's talk silver and gold now, Philip. Last time I saw you was at the IPMI in Arizona. We were speaking about silver, and you were bullish on silver short term, but long term, you could see prices dipping below $20 in 2015. Has anything changed since then?
Not really, no. As you say, we're bullish in the short term, so we're still bullish for the next few months. I would say Q4 and at least part of Q1. But after that, we think prices will weaken. So the conditions are still there for prices to strengthen. And we've seen that already. We've seen, for example, the decision for QE tapering to be delayed, huge uncertainty, but that's helped to push prices up to an extent.
Right, so that's interesting that tapering helped silver prices since it's an industrial metal. But in this case, was it just following suit with gold?
That's very much so, yes. In terms of the correlation with gold, gold is sort of the primary driver there, but it's sort of dragging silver higher. As you say, it is mainly an industrial metal, and industrial demand has improved recently off of a low base. So we can't really think that industrial demand is now very strong, but we are seeing signs of an improvement for silver, and that is helping the price to a limited extent as well.
On the gold side, Philip, I know in the past you've said that the 10-year gold bull run is behind us. Do you still feel the same?
Ultimately, yes. We think we are in a sort of a bear market. There is still upside potential for gold as for silver as well. Again, for the short term, for the next few months, end 2013, early 2014 as well. But we think still the market sentiment is very challenging. So the market is still, I think, unconvinced that there are sort of a lot of legs left for gold to move higher.
And is that the general sentiment you're finding at the LBMA?
I think generally so. I think people are, when you get a conference together, there is some optimism, probably a little more optimistic than this week compared to last week in Denver, in terms of the miners and how they were perceiving the price performance. But I think here, when you have, for example, the refiners and the banks, they're looking perhaps for some new ways to, not reinvent themselves, of course, but some new ways and how they can sort of drive their business going forward.
So when you say you could see some upside in gold, would that only be momentary? For example, when we saw gold pick up right after the latest FOMC, after Bernanke spoke, do you just see momentary bursts for gold?
I think that is absolutely true. We've seen that, as you said, after the QE sort of announcement, so to speak, gold moved higher, but within sort of 24, 48 hours, much of that sort of euphoria or impetus had been lost. So we think what we're looking at over the next few months is more sort of an uptrend in prices, but a lot of volatility, tremendous uncertainty with sort of institutional investors unconvinced about the path for gold. And I think, yes, as perhaps tapering is delayed, then again, we see bursts upwards for gold. But I think it'll be very, very choppy, I would say, to you for the next few months. But I think with a bias to the upside.
Philip, why do you think that's the case? I've heard many people tell me, look, gold right now is in no man's land, doesn't know which course to choose. How come in the past when we've seen crises in Europe and in the States, it really helped propel gold, but not so much now?
I think what we're seeing now is that investors, after we hit sort of $1,900, gold couldn't move to 2,000. Investors were disillusioned the past year, perhaps even 2 years now. The returns on gold has been quite challenging. Added to which, we've now seen stock markets do very well at times, and I think that's very much helped as well. So I think the argument for investing in gold has been perhaps a difficult one to sell for some investors.
All right, so finally, Philip, I'm going to have to ask you if you had to look at a trading range for gold.
Good question. Again, for the short term, as I said, we're a little bit bullish. So I think gold could get towards 1,500, may even sort of hold that level over the next couple of months. I said for Q4 and into Q1. And in terms of the lows, I think we are broadly where the lows will be, perhaps maybe at sort of $50, $70 below that. And again, in sort of choppy conditions. But I would say as we get through the next few months, then the bias is more towards sort of testing the upside rather than the lows.
Fantastic, Philip. On that note, I'll let you get back to the conference, and I hope you get to enjoy a bit of Rome.
Thanks. Pleasure, Daniela.
And thanks for watching our coverage from the LBMA. You can email us at newsfeedback@kitco.com or follow us on Twitter at Daniela Cambone. Thanks for watching.